Morning, everybody. It's Monday, the 14th of December. We are Signal Centre Talking Ball. I'm Joe Neighbour, and I'm joined this morning by Ian Coleman. How you doing, Ian?
I'm very well, mate. You?
Yeah, not too bad, thank you.
No, they couldn't say that.
It's Monday, isn't it? You always get a fat tongue on a Monday.
Exactly.
So, yeah, all good. No Steve this morning. He is out doing some bits, but he may join us at some point. So just crack straight on then, I guess, in terms of headlines over the weekend. No surprise to anybody that Brexit still hasn't happened and negotiations have been pushed back further. Boris Johnson and Ursula von der Leyen added fresh impetus to push to get a deal done. And the pair have both said they're going to go the extra mile to get that done. There was a hard deadline from what we were aware of that was set in place yesterday, but again, that's been pushed back. Although Sterling looks like it's loving it at the moment.
Yeah, I don't know. I think it's short-lived, but we'll get onto that. I think I can't see if they can't. If they keep on going miles apart and then in again and miles apart and in, I can't see how it's going to make a hell of a lot of difference. This mild extension that we've got, and of course, if you keep it, it's making a bit of a mockery of it all, isn't it? If you keep on saying, well, it's definitely Sunday and that's it, and blah blah blah, and then you push it again, and they'll probably get up to the 31st of December, which was set. How many? I mean, that was set 12 months ago, wasn't it? And they'll probably move that. So
yeah.
I can understand the need and the want for a deal, but if you're that far apart, you might as well just call it a day. But anyway,
well, they need to be seen to be trying to do something, don't they? Because I don't think no deal is obviously not what anybody wants. Well, maybe Boris does want it, and that's part of the game. On the COVID front, Germany's going into a hard lockdown on Wednesday. Non-essential stores will be closing. Employers are to shut down workplaces, and school children encouraged to stay at home. So taking some pretty strong action. It feels like, certainly around where I live at the moment, that the numbers have just gone through the roof in recent weeks. A lot of people I now know are catching it, and before that wasn't really the case. So
because you're tier 2, aren't you?
At the moment, yeah, but talk that it may be pushed into tier 3. I think Basildon is, which is not too far away, is one of the worst places in the country.
Okay.
I don't know. Last time round, everyone was talking about certainly up where you were. There was a lot more cases, weren't there?
Yeah, definitely. Hull was the big one, wasn't it? But so London's is going to go into tier 3 as well, isn't it? So
it looks that way, yeah. So. Coming right on top of Christmas is obviously not ideal, and obviously the worry now, people start getting it and they're having to isolate. I mean, my parents, my dad got it, tested positive.
Okay.
So morning, Steve.
All right.
Yeah. So he's got to isolate for 10 days from now, which is just before Christmas. But I think because my mum's in the household, she's got to isolate till 14 days. So it's after Christmas.
So if you've got it, it's 10 days. If you're living with somebody that's got it, it's 14.
Yeah.
If you've been in contact, okay, didn't realise that.
So Christmas might be delayed in the neighbour family this year. Bit annoying. Anyway, what's going on with Steve? You got anything?
Yeah.
I mean, I just want to throw you under the bus there. Just how you doing, first of all?
All right.
Good weekend.
Yeah, not too bad. Yeah.
Excellent.
Football was shite, wasn't it?
It was absolutely shite, and I don't want to talk about it. So
I bet you don't.
Swiftly move on.
Well,
just talking about obviously Brexit news, pushing the deadline back. Sterling loving it. Has that impacted the indices at all this morning?
Yeah, I mean the indices overnight looked okay, looked a bit handsome. But we've had a little bit of a pullback. We can see the FTSE got up to just below 6,600 overnight, and has pulled back this morning. I think that's just a retest of the support before we maybe crack on again. DAX as well as sort of like we saw this decent recovery from the lows that we posted on Friday. I mean, 13,000 we got down to. Obviously that's a big psychological level, and we're 200 odd points higher than that. And the Dow as well, the Dow cracking on this morning, 170 up this morning. So very nicely through the, these are hourly charts, so short-term charts, but very nicely through the short-term resistance. Nasdaq looks a little bit of an odd one. Obviously, that's had a great year so far, but we're sort of in a bit of a sideways channel. The sell-off last Wednesday, we haven't really recovered from that, but it's looking to push through again this morning, maybe into the US session. This decent resistance and previous swing high on the hourly chart. S&Ps as well, not far from the all-time highs, and we're sort of like looking like posting a bit of a bullish flag pennant as we break through. So everything looking quite rosy on the indices side of things. Again, sort of if we get some decent Brexit news, pushing it back, I suppose, is good news. Then we should see that react higher. The market I'm really interested in, and have been for a little while, is gold. I keep dogs interested in it too. I keep looking at this head and shoulders pattern. I can redraw it after I've been stopped twice on the gun to head challenge, and this is what I'm looking at today for my gun to head. I'm already sort of short of it, but I'll obviously wait for the challenge afterwards. But the measure move target in this head and shoulders formation, if it is confirmed by a break of 18, around about 1820, really would be a clear break. So an hourly close below 1820, and that would be a signal for me that it's a confirmed break of the neckline. And yeah, so in other words, I'm preempting it through the gun to head challenge, and it keeps catching me out. But we have got this decent resistance in the form of the cloud, and we've got a trend line as well coming down here. That trend line currently coming in at 1841, but the swing high was just below 1848. So I think really stops above 1850 are well placed. Targeting this move to 1775, but obviously still hasn't confirmed yet. It's not a head and shoulders formation until we break this neckline.
Cool.
So that's about it.
Thanks, Steve. Ian, how's it looking on the FX side?
I'd like to say it's all about the dollar, but it's not, is it? I mean, it's sort of, this is the weekly chart. So we've just had this doji style candle. It is at a 161.8% extension, but that's that leg. And then we've got a push lower this morning, so it's quite sort of a critical point for the dollar index, and that's reflected quite well when we go to sort of dollar-based majors. But here, I mean, how many days is that? It's just not going anywhere, is it? 7 days, 7 trading days, which is obviously over a week. It's just consolidating around this 261.8% fib. So if it breaks lower, and I think we've just got to get out of this range, basically. This is a 4-hour chart. I think if we dip down here, we could potentially get a double bottom as buyers look to that 261.8% fib. But also, conversely, traders might just be looking at this as consolidation, maybe a flag. And if it is, then it's got a bias to break to the downside. So I think you really got to get out of this range, which is 91.24, 90.47 before before we're going to get any sustained moves in either direction. I think we've got a gap open that's not been closed yet. It has on quite a few of the majors. If we break to the downside, then the sort of next support levels down here, which is at 89.56, which is quite a decent leg, really. If we put the old percentage ting on, is that the percentage one? Maybe not. Yeah, so just over.
Looks good though.
It's like that. That's another little tool that I've been playing
like
with. Just over 1% loss in the dollar index if it does push lower. So if you go back to sort of the FX majors, and we've sort of been talking about, or I was talking about this last week. This is this confluence area here, 121.50, 121.55. So we made a doji style candle. My favored trade is still to the downside, but it's all about that dollar. It's not really about euro at the moment. And if you look to the big picture, and this is the monthly chart, it is quite critical, because if we don't hold this level, then we could get quite a decent move up and break these previous swing highs and get up to sort of 132.15. So it's quite critical at the moment, and I keep on looking for reasons, i.e. fundamental reasons, why we're going to get a move in the dollar, and there's no sort of news or sort of data releases this week that make me think that we're going to get a decent push. So it's all a bit, I don't know if it's just holiday season. I don't know what you boys think about that, but it doesn't feel like we're going to go anywhere quickly. And this was cable. So again, on these longer term time frames, we've got a perfected level here at 135.50. But again, it needs to move to the downside. On an intraday basis, we've had this lovely gap open. Gaps have a tendency to be closed, and I've just put an extension on this, which is the 78.6%, because a pullback here, maybe to close the gap, and then a move up to make a reversal pattern. If you get up to this level, but it needs to pull back first before it gets up to that level, that would make a butterfly formation. So again, I think cable maybe dip lower this morning. I'd watch for new squawks really. And again, just dollar Swiss, and we're going to reflecting back on the dollar, because the Swiss franc's really going nowhere. This is a perfected level here at 88.65, so that means we've got a perfected level on euro, cable, and dollar Swiss, but they're just not going anywhere. Here we've got a 261.8% extension level at 88.56. So again, on a risk reward basis, it's quite nice to sort of try and buy these dips, or buy these dollar dips with quite tight stops, because if this is a base, then obviously the medium term bias is or the potential R risk reward factor is going to be quite decent to the upside. Dollar CAD, I can't get a feel on this. I still think that out of all the FX majors, dollar CAD looks the worst. 125.21, which is down here, I think is going to be a decent support level, but I think just see it sort of drift lower. I haven't got anything else that would suggest that it's going to stop like all the other dollar majors, and that should mean that oil continues to move to the upside. And then Aussie dollar, just last of the dollar majors, we've got a perfected butterfly here at 77.52, but again, it's just not holding, so it's a critical time for this. And obviously this has been buoyed, or the Aussie has been buoyed by stocks moving to the upside, and that doesn't really look like it's going to stop anytime soon. Euro sterling, hindsight, I know, but got this pattern over the weekend. So that was a butterfly formation, and we've come quite aggressively lower. But again, we have got that gap. So this has a bias to move lower, but that gap has a bias to close. So, you know, maybe selling the gap might be a quite good idea. And if we look to another time frame, and this is the 8-hour time frame, it's also a different pattern there. We've got a 78.6 and a 127.2, which actually makes a Gartley. So we had a Gartley and a butterfly formation around about the same level. So there was warning signs that that sterling bias could change. The yen crosses, and I'll just look at euro yen really. Again, they look like they're going to move, or they've got the potential to move to the downside. And again, talking about risk reward, we spoke about this the other day, which is just ridiculous R on a medium term basis. It's like 16R with a stop above here, but very similar to the dollar in that you've had 7 days of a consolidation because it's a risk asset. Here we've just had 7 days of consolidation. So again, we need, I think, a news catalyst to really get these risk assets at least moving.
Cool. Thanks, Ian. I mean, we said when we were talking about guns to the head just off air, you know, we're not getting any winners with this at the moment because we're all trying to sort of wait for this turning point, which is, you know, going to create these strong moves in either direction. So while we're just sort of chopping around and markets aren't really going anywhere, it's proving pretty impossible to pick a winner in the short term. So coming on to that, yes, from Friday we had 2 trades. We had a dollar index long and a gold short. The dollar index long was, I think, half a tick offside. No, 1 tick offside at the 9 o'clock close, and we were stopped on gold. So yeah, pretty severe on the downside. Hopefully that can change today. Steve, I know you're ready with your gold one. Do you want to get that done?
Yeah, as I said, this is preempting this break of the neckline. I'm selling it at 18.28, the stop at 18.48, and the target of 18.76. It gives me a 3-to-1 risk reward on this. Actually, I've got that in now. Hold on a second. I've got to line it up with what the price is at the moment. 48.5. So it's a 20-tick stop, and I'll target a move to. Let's just keep it as we were. 2.5 to 1 risk reward. 17.78.5 the target. Getting short at 18.28.5. Stop at 18.48.5.
Nice one. Good luck, mate. Ian, you got one ready?
Yes, mate. I think this is going to be typical of what's going to happen over the sort of next couple of days. We're just getting these squawks of Barnier's sort of saying that we're backtracking on fisheries. There was split on state aid. There's a narrow path, blah blah blah. And I think this is just going to make some choppy price action. But we normally say you do need a little bit of news to be able to get some decent moves in these markets. So I'm going to go for closing this gap in cable because I do like this as a what currently looks like a counter trend move. So I'm going to go short at 133.98. I'm going to target 132.18, which is the gap close. I'm going to just put my stop above that 88.6% retracement level, because if it breaks that, then all my symmetrical patterns go out the window anyway. So 134.38 is a decent stop with a R of 4.5.
Nice. Best of luck. I'm also looking at a gap fill situation with sterling New Zealand dollar. As you can see, this is the trend on the hourly chart, and this goes back to the 21st of October. Pretty severe. We saw a sort of big move to the downside last week, and we have opened up with a big gap today. Looking at it from a much shorter term perspective, we had maybe a little bit of a range formed here, certainly some support around this 88.69 level. We then broke through that, and now today we're seeing a retest, and that's also a 50% retracement of this move here from the 4th of December down to these lows on the 11th. So a couple of reasons there, a couple of decent resistance levels, I think.
Yeah. So
going to sell it at 88.46. Going to put a stop loss just above 89, so 189.05, targeting a gap fill down to 86.45, 3.5R on that one today. Let's hope that one of us lands a winner. Okay, data wise today, we have Eurozone industrial production due out at 10 a.m. Is the only high impact data point I've got here. Obviously Brexit chat is ongoing. That's likely to be the big event that's going to move markets in the foreseeable, unless we get any sort of updates on stimulus packages from the Fed. That may also. So they've got a policy decision on Wednesday. Did you say? Did you mention that, Ian? Fed on Wednesday.
I did mention it, but yes, we have. Yeah, FOMC Wednesday, and you've also got RBA minutes overnight. That if you're in Aussie dollar.
Okay, cool. Okay, well, that pretty much wraps it up then. Best of luck if you're trading today and this week, and we will be back in the morning.
Indeed.
Cheers.
Enjoy. Cheers, lads.
Bye-bye.
Cheers.